It's been a week, a long week, since that FOMC gathering, but the hits keep coming, folks. Kevin Warsh, remember, he promised major changes at the Federal Reserve. If you listen to him closely, he thinks it's the most critical time in the history of the establishment outside of emergencies. But no one seems to be happy, at least not the establishment. I want to bring in Alpine Saxon Woods, their chief market strategist, Sarah Hunt. So, Sarah, you know, I'm just looking in the last 24 hours, and these are kind of ugly. The Federal Reserve goes wacko. That was FFT. Kevin Warsh is facing more than a communications problem. I think that was New Yorker. You had the fifth Fed official say that I think we should hike with Schmidt yesterday. Now, on the flip side, Thorsten Slock this morning with a piece saying Warsh is right. Like, whoa, I mean, that's kind of helpful. And then on the other side of it, Besson comes out swinging at the Wall Street Journal defending Warsh. You know, what do you make of all of this?
I think change is very difficult for everybody. I think that especially when you had some sort of a track record that you could look back and go, I think that this, if X happens, Y is going to happen, and the Fed is going to do this. Anytime you have a major change at the Fed, there is a digestive period. Now, obviously, there are a lot of people who are not happy about that. They're not happy about the fact that he kept rates. There's not even there's argument within the Fed itself, right? Because you've got members coming out talking about how they think things should happen in a different way. I think this is a period of adjustment. I don't disagree that the Fed needs some better data sources than they've had in the past. I think that the world is moving in a different way than it had been, and it's hard to keep a handle on all of those variables the way that we were doing it in the past. Is that going to be, are we fixing everything? I don't think anyone's going to be happy with whatever comes out because you're never going to get 100% buy-in, but I think more information and trying to understand how the Fed thinks about it, and I think that's the biggest problem, is that people are still looking for, okay, when you say X, what does that mean if it happens? What are we going to go to Y? Right. And I think that's what's still unclear, and that's why people are having
and I guess the folks who have somewhat come to defend Warsh, not necessarily on what he may want to achieve, but just on the other part of this, that maybe markets have depended too much on the Federal Reserve. I mean, and maybe people who do this for a living, maybe, you know, it's time to just roll up your sleeves and start to make some, you know, to do this work yourself as opposed to gaming the Federal Reserve. Even having fewer meetings, I like the idea of fewer meetings because I just think the reactions to these meetings have been so severe that it's you know, the efficient market thing is out the window.
Well, without trying to date myself, let's just say I've been around long enough to remember when it wasn't you were given a roadmap very clearly. And I think that that's, you know, especially because...
There was a briefcase indicator.
There was a briefcase, there was a sandwich indicator, there were a lot of indicators. But I think that there was a period of time where, you know, right now, Wall Street specifically is always so reactive to things, and we want the answer today. We want the answer, what's going to happen, and then this is going to happen. The economy doesn't move as fast as information does. And I think that there is something to be said for not reacting to every single monthly meeting or every single thing that happens, because you've got to take some time to figure out what's going on here. Just like what's going on with a lot of the pricing right now, is hiking rates really going to solve in oil prices? I don't think it is. I don't think it solves that except for hitting demand. So I can understand why there's hesitation to make a change.
Right. I mean, it won't help. It won't help with auto insurance, auto maintenance, and some of these other college tuition. I want to. Last time you were on, you gave us Lilly. It's through the roof. Uber's down a little bit. Are you staying with Uber?
Uber is one where the market keeps saying, recheck your thesis, recheck your thesis. I think longer term, yes, but I think right now there isn't a near-term catalyst that we can see today. So we're looking at that very carefully. You know, I still think that there's a lot of promise there, and you did have the inflection in free cash flow, but it's a bit tricky at the minute.
Right now, you like Lockheed Harris, LHX.
L3 Harris.
Yeah, L3 Harris, yeah.
And so that's another stock. So the defense stocks went crazy when the war broke out. Then they got smacked around. They were going to IPO, or they were going to spin out a part of their business. They took a look at the IPO market, decided to wait a little bit on that. And I think that there is a push-pull right now in what's going on, but there's a ton of backlog that you know is going in there. People are worried about spending. People are worried about government spending. That always hits the defense primes pretty hard. But I think that if nothing else, the last 6 to 12 months has taught us that we are probably going to need more missiles, and they are probably going to get built on American soil. So I think that there's a lot going on there, and we like it here.
Yeah, United Rentals, which is one of my all-time favorite stocks. You like this one here as well?
Like that too. I mean, there's a business model that was tested deeply in the financial crisis, because I remember when they nearly went bankrupt in 2008, 2009. I think that gave them an incredible new roadmap of how to think about their balance sheet, both with new equipment and used equipment. And I think what people get wrong about it is that they extrapolate the spend forever and they forget that they sell off some of that used equipment after a several-year period. So there is a push-pull on the cash flow that isn't necessarily reflected in everybody's estimates.
Yeah, and I tell you what, it's every time I tell people when you walk outside and they're building, you have one of these little bitty cranes or something. Take a look at who it is. It's probably going to be United Rental.
It is the biggest equipment rental maker, I mean, equipment rental company in the U.S. and in parts of Canada and other parts of the world. It is a juggernaut of a company, and it's a very fragmented market, and they have a giant market share.
Absolutely.